Hi, and welcome to this edition of Market Analysis. Today is Wednesday, August the 3rd, 2022. I'm Giovanni Benacour, and I am a trader and operator with Vantage Markets. Do metals miners hold the key to future of gold and silver prices? Analysis of gold and silver often focuses on demand side factors, such as the impact of U.S. short-term interest rates and the U.S. dollar. While these are important short-term drivers, mining supply can also be an important driver of longer-term price trends. In recent years, mining supply for gold and silver has been on a downtrend. Gold mining supply fell 7% between 2016 and 2021. Meanwhile, silver mining supply has fallen even more sharply, declining 8.5% during that period. A reduction in new supplies may be part of the reason why precious metals prices rose over the last 5 years. There appears to be a strong inverse relationship between the annual growth rate in the total amount of precious metals supplied and movements in precious metals prices. Over the past half century, years in which gold mining supply increased tended to coincide with declines in both gold and silver prices. The same was true when silver mining supply increased. In, the, in this particular chart, but what will happen to mining supply in the future, it is hard to say. On one hand, the cost of mining gold and silver is far below the current level of prices, which should create an incentive for more investment in the sector. On the other hand, there don't appear to be a lot of new mines coming into operation. So, if new supplies are to come, they might not arrive on the market for quite a long time, and else equal. That could be supportive for prices. Let's take a look at the charts of gold. So, looking at gold, we see how gold, right? We looking at gold, we see how gold has been ranging. Okay, in this 2 hour chart, we see how previously at the beginning of the month, yesterday, gold had actually made a nice jump to the upside, reaching a new level of seven, or not a new level, but it came back up to highs of 1,788. From that high, it has retraced all the way back down to 1,754, still 1,755 to make it an even number, or actually an odd number. But look at what gold is apparently looking to do. Looking at this chart, if we look at this chart, you know, analyze it really strong, we see that the 50-day moving average, exponential moving average, is acting as a support level, and this 200 is way below it. So, if that's the case, this conjunction or this retracement from that high movement toward the low now and being tested again and making that nice jump to the upside is telling us that, all right, so if supply in gold is actually in deficit because of the mining, could we actually see gold come back up to 2000 this year? Perhaps not to 2000, but looking very closely to it, 1850 could be that level that we could probably see by the end of the year. I'm Giovanni Benacour, and this is the market analysis for gold.